following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. Well, you're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it it's a TGIF, folks. Gotta love it. Surrender and let go of the past. This is a great card, folks. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means you can enjoy the dream that's happening right here, right now. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 45, NASDAQ up 8, S&P's up 1.5. Gold contract down $9.80, trading at $12.64 an ounce. Silver down 36 cents, $16.27 an ounce. Platinum flat at $9.64 an ounce. You have copper flat, $2.88 a pound. Light sweet crude up 51 cents, trading $49.53 a barrel. Notes. 10-year note down 8 ticks, 126.03. 30-year bond off almost a full point, 154.02. King dollar up 663 ticks, 93.370. The euro is at 117 to the U.S. dollar. The yen is at 110.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You're up 34 cents in the SPYs. You're at 247.30. This 248 wants to get whacked, folks. We've hit 247.79 today. Bottom line, I expect the S&Ps are going to close right up here. Dow Industrials, 9th day, another high inside the Dow Industrials, another all-time high inside the Dow Industrials, that is. Dow Industrials right now are trading up to 45 bucks. You're at 22,071. You've hit 22,089, and each and every day, bottom line, you're not getting the price spread, but guess what? They're going to higher highs. Now, composite and the NDX 100. It's going to be an interesting close out here, and this is why. So the composite is at 63.48. 63.41 is the number to keep your eye on. It closes over that. Looks like it will. That's going to give it another shot to test the highs of Wednesday, which would be 63.94. My take is that we're not going to get to the highs of the 27th. We can absolutely test the highs of the 2nd, though, because what you had out here is this. Yesterday, you pulled back slightly. You have light volume, which makes sense, okay? Bottom line, get summer trading. Out here today, which is Friday, of course, Mondays and Fridays, you're going to have actually lighter volume. We're at 1.4 billion right now, so that'll throw in probably around 1.8 billion. Now, NDX 100, different ball game. That's the largest 100 large cap stocks inside the NASDAQ. We are at 58.96, and the number, you get a close under 58.97.68. That is a failure on price, failure on volume from the week of the 9th of June. It's subtle, but bottom line, that's what it is. If we put this up on the Qs, what you're going to see, which is a little bit easier to see in case you don't have the futures out there, we put it up in the Qs. What you're going to see on the Qs is that your high out here, that is your benchmark, is $143.90. Your volume characteristic is 192 million. Well, we've done 142 million, so we're certainly not going to do 50 million, 50 million in the next 49 minutes. So it's going to be all about the price right now coming into the close, 143.90. If we go take a look at the futures, the NDX 100 futures, to see where this baby is shaking out right now, what you have is this. The spread out here today, you've had a low of 58.74. You've had a high of 59.12. Right now, we're at 58.95. Bottom line is that you have a high volume low out here. So your probability is that you're going to be closer to the low than you are to the high. That's how that shakes out. Gold contract. What do we have with the gold contract? Gold contract out here, down 970. You've done 255,000 contracts, which is big contract volume. We are trading at a price point of $12.64. What I expect we're going to see here is that this baby's going to try to make its way back to the $12.50 area, actually. And then where I'm looking, folks, is this. On July 3rd, the market came down hard inside gold. We went from $12.49 to $12.25. Now, that has some big volume there. You can't see it on this contract. I'll bring back the contract we were trading there. It has huge volume. So that number there is going to be hard to come down and break through. And the reason that I suspect we're going to get down there is that we'll go over to King Dollar. So King Dollar, we're looking for some kind of a bounce on this baby. It not only got a bounce, it got a big bounce. It got it on volume. It broke a downtrend that has been in place. Didn't break the whole downtrend, but it broke the downtrend that has been placed. You can make the case that 96,255. You know, your first number that I was looking at would be the 94 area, but the way this has broken that downtrend today is telling me that, okay, you know, this, let's put this up here so you can see how this shakes out. The dollar hasn't been able to bounce at all since just going back to March 17th. So just a 0.382 bounce, which is a dead cat bounce, by the way, is 96. When you line that up with the last time that we had any volume, you know, after the real downdraft on the 20th, is that that's lined up at 95,670. So the reality, and you take that into consideration with how it broke the downtrend, bottom line, it looks like it wants to go there. So what that will do, that will continue to put some pressure on the metals market. We go over and we take a look at the silver market. What you have with silver, silver's down 2.2%. They always whack silver harder than they whack gold. Well, yeah, they do. Silver out here today, we're trading down 94,000 contracts. That's a big expansion contract volume. We are at the 16.26. What's game in silver is $16.14 as well as $15.70. The $16.14 is the high of your downdraft on the 7th, and the $15.70 is the high of the low. And if we come down Monday morning and you get juice behind it, that thing's going to go down to that $16 and $15.70 actually. You stay right there, folks. We'll be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And right in the middle of the day out here today, you had the Wall Street Journal report that Google is developing a technology for a product called Stamp, based on its AMP mobile web pages, which are designed to load faster than regular pages. The bottom line is that what this is all about, folks, is Snapchat. This is basically a Snapchat product. Now, if you go over to Snap and we take a look at it, so Snap went public. Right now it's trading up 63 cents. It's trading $13.56. This went public on the March 1st at $17, and this was basically a failure as a IPO. Went public at $17. First day went up to 26. Second day went up to 29, and then never looked back. And then it hit a low last week of $11.90. Intraday out here, it got interesting because what you did have intraday, it started out the day at $12.83, goes all the way up to $13.69, and then when that came out, which the announcement came out from Google Wall Street Journal rather, at 20 of 2, bottom line, the stock goes from it was down another 50 cents. But bottom line, it is a and don't even think of buying this thing. This thing's a mess. There's problems in paradise. If you want to see something that we haven't seen for a while, accounting problems, here you go. EFII, this is electronic for imaging. They design, market, product, and support color, black, white, printing on a variety of devices. The company's products incorporate hardware, software. They're sold basically all over the world. The low for the year is today, $26. The high for the year is $51. And when you take a look at their numbers, it goes like this. Gross numbers in 2013, you did $727 million for the year. This year, they're looking at $1 billion. Well, guess what? The stock got cut in half today because of why? Well, because of accounting irregularities. And they basically came out, let's see what they had to say. Electronic imaging faces months of uncertainty after saying its audit committee is conducting an independent review of disclosure and internal controls, and these go back to, let's see, what year they're going to go back to. They're going back quite a way. You can see why this thing is, and it has to do, let's see, Probe could take months. When you first pull this up, it's like, oh, you're talking about just downgrades, but they downgraded it because they had to disclose that the bottom line is that they have accounting irregularities, and they got to go back and decide, okay, what is real, what's not real. It's a disaster. Now, check this one out. You talk about large banks. What blows my mind is this, right? We know that the banks, bottom line, basically all got bailed out. No one went to jail. They're all back in decent shape. And there's plenty of statutes on the books that, you know, you can take people down for fraud all day long, right? Well, so check this out. So the banks are doing pretty good out here today. Most of the banks are up, right? Well, Wells Fargo's down 91 cents. And listen to this. This is amazing. Now, Wells Fargo last night filed this, okay? This is like crazy, man, okay? So Wells Fargo, reeling from the scandal over opening fake accounts last September, right, said it's expanding a review that could lead to the bank finding significantly more cases. So after they supposedly did a scrubbing of what's going on, now all of a sudden they found thousands and thousands more. Not just a few, because listen to this next one. The bank's reasonably possible that, this is what they filed with the SEC last night, that legal charges could surpass its reserves by $3.3 billion as of June 30th, up from an estimate of $2 billion at the end of March. The company also disclosed a new investigation into a separate matter by the Consumer Financial Protection Bureau. The board of directors is also reviewing its own structure, composition, and practices, which will lead to actions announced later this quarter. The bottom line is that they just opened so many accounts, folks. It is unbelievable. What blows my mind, this is what the thing that really blows my mind. It's like, okay, so Wells Fargo is the same one that last week, what had happened is that it was either 500 to 700,000 car loans that they had. They had them get double insurance on the car loans. That was totally fraudulent. But this deal about thousands, hundreds of thousands of accounts that they had people open and charging for them, it's just, that's out and out, basically criminal. It's like, it really, and everyone just keeps going, right? It's you got to wrap your head around this, folks, because it's pretty amazing. Now, the most hated guy in the biotech business, well, he's going to jail. So where is this story? The guy that took the EpiPen, folks, he was on trial about the last month, and he was convicted of fraud today in New York. And this is the guy that Martin Schickel. He's the one that took the EpiPen from, I forget what the number was, but whether it's, he took it up 400% or 500%. One of the he's notorious for raising the price of the potentially life-saving drug by 5,000%. Bottom line, he's going off to the can, and he's 33. Is he 33? He's not going to get 20 years. He faces 20 years though. He faces 20 years for fraud. The thing that's pretty wild about this, most times, what ends up happening is that if you're running a fraud, you're running a Ponzi scheme, which he was actually doing. That's what he got prosecuted for. You're normally not going to get any money back. What he did, though, he had, so here, this is where it goes. In the end, his lies to investors is what cost him his freedom, not his 2015 decision to jack up the price of an anti-parasitic drug. Prosecutors said Schickel, 34, misled clients about the performance of his failing hedge fund and secretly used their money to start another drug company and then took the $11 million from the drug company to repay them. So what ended up happening, he had lost all the money for the investors in the hedge fund. He actually had two hedge funds, lost all the money. Started did a reverse split and started a drug company. And then the drug company did become hugely successful. And he took the money off the drug company, paid the investors back. And the article in the Wall Street Journal this week, the investors actually got 3 or 4 times their money back. But bottom line is that you can't do that, folks. That's the bottom line. let's see. Prosecutors said that he was claiming that he was managing as much as $100 million when in fact he never had more than $3 million. Bottom line, he's going to the can. You know. And now, you know, when you basically look at that, why can't they put plenty of folks in the can in these banks? You know? Some of the higher volume stocks out here, folks. Let's go take a look at them. You have Bank of America up 61 cents. You get Wells Fargo down 89. Viacom, that's getting hit. We're unleashing from the cable, no doubt. That's down $4 at 30 bucks. You get Yelp up $8. That's getting big action. $39. Citigroup is up 78 cents. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go over and take a look at the XLE. XLE out here today, folks, up 27 cents, $65.71. And this baby is still having a hard time, bottom line, getting a bid. If we put this on a weekly basis, what you're going to see out here is that this is still building cause to get down, test its lower point, which is the 63.29, and we'll see whether it's an ABC structure on the way down. If you go to ExxonMobil, the largest weighting structure, bottom line, this still can't hold price. What saved the XLE out here in a huge way, in fact, the ExxonMobil's in its lower range. As soon as you're under $80.30, which is 10 cents under, that's its lower range, and it wants to go lower. What saved the XLE out here this week was Chevron. Strong like bull, too. Chevron went from $104 up to $110. That's the second largest weighting inside the XLE, and that's what no doubt saved it. Now, that being said, what's going on is that at the price point of 110.81, right where we are, you're coming into 49 million on the way down. That's ICE also. Okay, that's where it broke down from. And you're done with 30 million this week. So that's a little problem child. I suspect that the highs of this week would get tested again. But if you fail on that high, see ya. Don't want to be ya. Now, let's go to the XLF. So we get a big jobs number this morning. Jobs numbers come in. Market, bottom line. The banks liked it. That's the bottom line. That being said, the XLF right now is at 25.36. What's going to get wild here is watching this, how we're going to trade out into the close, and this is why. So watch this. March, the first high in the marketplace was the week of March 3rd, $25.29. We did 307 million shares in the XLF. That wasn't enough. XLF goes back to $22. It comes up and tests that, and it tested that the week of July 7th with 297 million. So 297, 307. Not bad, right? This week, 231. That's the problem. The 231 is a problem child. So if, in fact, we get a close underneath this, they'd have to close down 8 cents, which, by the way, in the XLF is actually hard to do. This is a very slow-moving deal. That would be a failure on price, failure on volume. Let's go over to J.P. Morgan, because J.P. also is trying to make it up and over this same area from the third, and J.P. doesn't look like it's going to handle it. So J.P. Morgan got to a price point out here of $94.40 today. It would have to close over $93.98, and it doesn't look like it's going to do it. So what you have is this, is that you're at $93.61. You are going into 81 million shares. Last time that it was up here, which is July 7th, these are always the same weeks, that was July 7th, 60 million, and we're going to do maybe about 60 million. So you get JP Morgan that's going to fail on price and volume. Let's go over to, well, actually, let's go to Berkshire Hathaway, because Berkshire Hathaway is the largest weighting structure inside the XLF. And Berkshire, bottom line, is over this pivot point that we've been talking about. Berkshire, the number to keep your eye on here is $177.86. It's over. It has light volume, but it's over, and it doesn't look like it wants to back off whatsoever. The so Bank of America, yeah, we were talking about Wells Fargo. Wells Fargo is toast. The bottom line is that inside of Wells Fargo, you can see that not only fundamentals to understand what's going on, you're talking $52, and the same March, let me get this up. So when you're talking the same March time frame, you're talking $59. And what's happening, yeah, if Wells Fargo breaks inside 52, which it hasn't yet, well, it has, but I mean with force, because that's where we came off the bottom in 2016. Wells Fargo in 1 week went from $44 to 51. Came off that bottom, was screaming coming off the bottom. Let's go take a look at the King Dog inside the NDX 100. It looks like good old King Dog here. This is going to be a big number to keep your eye on. The reason being is that Apple come out with monster numbers. Bottom line, the number to keep your eye on is 156.65. So that is the number that good old Apple would have to close over today. Now, it doesn't look like it's going to close over that, number one. So what does that do? Well, Apple, folks, has been in a consolidation. It's a large consolidation, though. The top of the consolidation is the highs, 156, 158. Well, the bottom is 142. And you get a high volume low at 142. So it's like, guess what? You're not going to be able to handle this price out here today. You start putting that together with the aspect of where this NDX wants to go. If we go over to Amazon, take a look at Amazon. You know, Amazon's going to finish the week out at, it looks like, 958. Anything underneath 1,016 is saying it wants to go to the lower end, which is 927. We go to Google. We take a look at Google. No, Google never even made it. That's interesting. Yeah, Google is almost at the lower end of its consolidation. The lower end of Google's consolidation is 894. You're at 926. That's after being up at 988. Let's go look at Microsoft. So you can see where what you have here is these larger weighted equities inside the NDX 100. Bottom line, are not holding price on the weekly basis. Microsoft isn't either. Microsoft, 72.89, it would need you at 72.59. So that's going to go at the lower end of consolidation. So what you have out here is that you have the aspect that window dressing is finished. You still in summer trading, that's for sure. But what's also happening, folks, is that you're coming into not only summer trading, but what does end up happening is this, is that what I've seen many times is this. The second week in August, that is when traders come back. Now, the mob comes back after Labor Day. But what does happen, it's got kind of earlier in the last 20 years, you know, by a week, 2 weeks. The second week of August, you can start getting some big action. And guess what? We're going to be coming into the second week of August, and we're going to be doing that pretty soon. So you can expect the volatility to pick up a bit and all of the above. Let's go take a look at the XAU and the HU. Well, first, let's go look at the GDX. So you had gold pullback. You had the dollar index takeoff. The GDX right now, okay, so this is pretty cool. So what you have is this. You have a consolidation that we've been in, and we've been in this consolidation going from the beginning of this year, January. Last week, you got to 2306, and we had some good volume. You had volume of 234 million. We tested that this week, and you only had 144 million. It's not enough. Okay, so what does that set it up? Well, you got plenty of support laying out at like 2206. So it's going to be intriguing. I suspect it's going to get down there and try to test it, but that's a lot of support at that area. Let's go take a look at the XAU and the HUI. So the XAU right now is trading down 185. Gotta get the volume in. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow right now is up 36. NASDAQ is up 1. S&P's a flat. We're going to right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. 877-927-6648. Let's go take a look at, as we're coming, we still got 20 minutes, but as we're coming into the close here. So we are at 143.43 inside the Qs. 143.90 is the number to keep your eye on. We take a look at those futures out here. Inside the futures, what you have is that you have, you're trading at 58.90, and our bottom line, any close under the 59.0750 is a failure on price, on volume, from the high that was generated out there in June. So if we stay with this for a second, what you're going to see, the wild thing here, folks, is that this is a monster consolidation. So if you go back down to the bottom of the consolidation, you're talking about 55.60 inside the NQs. It's a big number, and I suspect we're going to get there because all these numbers. So if we go to May 17th and 18th, high volume low on the 9th, high volume low on the 5th. We had a high volume low on the 27th. Those babies are there. So it's really going to be next week, what is the catalyst? And bottom line, what is going to drive this market higher? Well, you know, when we take a look at the oil market itself, so what you had out here, oil right now is trading at $49.50. You know, we were talking about yesterday, Andy Hall, one of the best oil traders, you know, probably in the last 20, 30 years, closed this hedge fund. And what you have is that the aspect of he had long-term bets, folks. What he had is this. So he's down 30% in 6 months, and you know, and if you're running money, and he's running big money, including his own. That's big numbers. I remember when he disclosed a few years ago, you know, where he was at, and where he was at. He was actually looking at much higher oil prices. So the much higher oil prices, okay, just never came. You know, when we take a look at this and you take this back and we say, okay, where have we been? It is pretty amazing. You know, oil cracked in 2015. We got down to $43. You had a counter trend bounce to 62 in 2015. Then it never looked back. What happened then is that it, bottom line, has been staying at this low, and that's after coming off a high of 112. So more than likely what you have there is that the aspect of the option trades that he had options on futures, probably just didn't come in. You know, there's when I was just talking about the hedge fund guy that was guilty, okay, this Martin guy, it's important to understand this questions inside the den about, okay, wire fraud versus fraud in general. So he got not guilty of wire fraud. This is what you want to wrap your head around, and this is what's totally different inside the finance business. What you cannot do, what he did here, and this is what they got him on, you cannot say, let's say that you are out raising money, and you're in any other business, okay? If you're not in the financial business, you can almost say whatever you want to say. Not if you're raising money, but if you're trying to do certain things. You're in the financial business. If you say that I'm running $10 million and I'm looking for money, and you don't have $10 million that you're running, you can go to jail. Flat out. That's how it works. What has happened, which is really wild, in the past year, is that bond traders, right? Now, so watch how this is. I can totally understand what I just explained to you. That totally makes sense because people are saying, okay, well, what are you doing? You tell them what you're doing. That's fraud. Flat out. That's what it is. Now, what has happened in the bond market is a lot more intense, and this is what it is. So for years, bond brokers and bond salesmen always made the most amount of money on Wall Street. And it's because that their spread was so big. And the spread means, folks, what you buy a bond for and what you sell a bond for. Well, what has happened in the last year is that the feds turned around and said, you know what? And this is what ended up happening. What happened is that a large, and these are all professional traders, a large institution decided that, you know what? I call up my bond guy. My bond guy tells me that bonds are trading, let's just say you get a $100 bond. That bonds are trading, 98 by 99 and a quarter. And what that would mean is that if you want to sell them, you sell them at 98. You want to buy them, you buy them at 98 and a quarter, okay? And if I ask that person, well, do you already own the bonds? Are you buying the bonds? What are you doing? If that person is untruthful, that also is fraud. And that, I can tell you flat out, has always happened in the business. So what has happened inside, and this is on some of the large firms, what has happened is that they say, what are you talking about? Well, you can't do it. And so what has happened, and that's probably one of the main reasons that Goldman Sachs hasn't made as much money lately, and they're trying to figure out why, because of the fact that if you have a client and you want to know what the bid and offer is on a bond, and see, bonds are non-transparent. Many bonds are. It's not like we're turning around and buying securities. We know what they are. Well, a bond is a security. So what has happened is that they have to tell the truth. So so what comes in next? Well, let's picture that you got a great deal in a bond. Let's say you bought the bond at 90. You want to sell it at 95. And, you held it for a month. Bottom line, if the client asks you, would you buy it for? You have to tell them what you bought it for. So that's the aspect of financial fraud. It's absolutely different in the context of whether you're selling ice cream cones or, a whole different ballgame. It's that cut and dried, too. 877-927-6648. Let's get over and we take a look at the good old euro. So the euro today pulls back. Dollar goes up. Now the question is, so the euro is on a one-way trip also from 111 up to 119. Now, where does this baby want to go? Well, I guess 116.58 is next. And a normal retracement. Let's just see this for a second. So, yeah. This is going to get interesting. So, because 113 is actually game. 115 is a 27% retracement. 113 is a 38% retracement. Bottom line, I do expect what you're going to see is you're going to see some kind of retracement. We'll see what's going to keep the dollar getting a bid. But what you do have inside the dollar is this, is that it's gone down so long that it just makes sense that you get a dead cat bounce, folks. The dollar right now, so if I bring this back, watch. You bring this back, January 3rd is the number. We went straight down from 103 down to 92, I believe. Yeah, 92.30. That's quite a move, This thing wants to bounce up to 95. And then I expect, guess what? Then you know where it's going? This thing's probably going to 88 or maybe 72. Because how it's going to hit after this dead cat bounce, how it is going to come down, at least test the bottom, is going to be, is it a large ABC down? Is it going to rip apart the 88 area. You rip apart the 88 area, you're at 72. You stay right there, folks. We'll be coming right back. Dow's up 43, Nasdaq's up 6, S&P's are flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And as you do go over to TFNN, folks, the whole month of August, we are doing a promotion. And what the promotion's all about is that we'd like you to come over to Facebook and like us. And then each and every day, we are doing a giveaway prizes. We're giving away $5,000 worth of prizes in the month of August. And each and every day, what we're asking for is that we're saying, okay, like today is that what is the close of the NASDAQ composite? So what happens is that you go over to Facebook, you like the page first, you give us the number in the comment section. The cutoff time is 3:30, folks, okay? So check it out over the weekend, Monday morning, jump on there. Bottom line, we'll have some fun the whole month of August. As you're over there, you're going to see our man, Mr. Basil Chapman. He did a great workshop this week. That was the first part of a 2-week series of a webinar. You can still get in that webinar, have that right on your page tonight. The way you do that, you just go over to TFNN. You're going to see the opening call with our man, Mr. Basil Chapman. You can do a 30-day free trial of his newsletter. When you do that, you're going to get the first part of the webinar, which was on Wednesday night. The second part is going to be on Wednesday the 16th of August, and that's going to be an additional hour and a half. So what do you get? You get 3 hours of great teaching, and what he's talking about is he's talking about can sector rotation buoy the market into 2018. Pretty intense. There's no two ways about it, man. It's pretty intense that as we come into this close out here, they're buying the close. You get another all-time high inside the Dow Industrials. It's up 54 bucks. Let's put this on a weekly and see what this thing looks like. And on a weekly, bottom line is that this week the Dow went from 21,861 to 22,089. That's a number. There's no two ways about it. You take a look at the diamonds. We take a look at the diamonds. We put this on a weekly basis. The diamonds right now are at 220.60. Go back to the Qs and see if they're going to be able to get up to that 90-cent price point. They're at 63 right now. It doesn't look like they're going to get that 90 cents because it's 143.90. Now, small caps. He doesn't talk about the small caps. Small caps, folks, also went back inside their lower range. Small caps out here trading 140.25. Anything back inside the 140? Actually, no. Yeah, at 140.86. 140.86 gets you back inside there. You're at 140.27. That's setting up that the small caps can actually get down to, I guess the first price point would be 134.64. That'll be quite a hit. If we actually, let's go look at the actual index itself. You're at, the Russell 2000's at 1411, and that, yeah, under 1425 basically gets you 1354. Yeah, 1354 is game. It's interesting. The small caps have actually been almost in the same place since December. Well, let's just call all this 2017 because December, the week of December 9th, 2016, they were at 1392. And right now you're at 1411. So bottom line is there hasn't been a huge amount of move inside the small caps. Dollar, bottom line, we're looking for a dead cat bounce in the dollar. Gold, we're at 1264. You're looking for about 1250. Silver's a problem child. Silver is a problem child. Well, hey, let's go to platinum. So this is going to get intriguing with platinum. Platinum, folks, has finally caught a bid. Now, this is a bid after 2 years. This is pretty intense. You know, you're at 969. Platinum looks to me like it's got about 1,050 game. So that's going to be intriguing in the aspect that gold is going down, platinum's going up. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Look forward to speaking right back here at 9 o'clock Monday morning. Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.